Welcome to Tracy Finance 101. Welcome, where I'm going to explain the stock market, investing, in easy chunks, very condensed chunk to get you into the game without losing your shirt. Hi, my lovelies. I know a lot of you guys might be afraid of investing and fear you should not operate under. You should not operate under because the market is a quick way, or sure bet at least, to grow wealth. It is a sure way to grow wealth. It is. But you have to determine two things. Are you an investor or are you a trader? An investor is in it for the long haul. Okay, that means it might take years, months. A trader is usually, they're in and out, they're in and out. Nothing's wrong with either one, okay? But I'm going to really be focusing on investment. And that is the long term, the long term. And I'm not talking about decades, maybe one decade. But anyway, let's get started. Because I hear, oh, I want to invest. What stock should I buy? Woo, woo, woo. If you're a beginner, if you are a beginner, stocks, very, very temperamental. Can be temperamental. And a lot of people who are fearful of the stock market, I don't suggest buying stocks. I suggest buying other products. But first, let me explain what the stock market is. When I talk about stocks, I'm talking about a share. You're buying a piece of a company, one piece, and these companies use this money to pour in and to grow their business. And when there's growth, the stock market prices go up. As well, you are getting some capital gains. Capital gains mean that if you had bought that share at $5 and it went up $1, that meant you got a $1 capital gain in the price. So now that share of that price is no longer $5, it is worth $6. You got $1 in capital gains. That is all fine and dandy. That's all fine and dandy. But the stock market is just like the gas station. Okay? Prices go up at the gas station and they go down. And if you go to a real grocery store market, there's a lot of variety out there. There's a lot of variety of things to buy. That's just like the stock market. There are a lot of companies looking for your dollar to invest in their company. It is your responsibility to do due diligence and research. Find out, is that a stable company? Right now, that's beyond the scope of this video. I'm just explaining what stocks are, pieces of company. Now, as a beginner, my suggestion is to move to an EFT or a mutual fund. What is an EFT? You probably never heard of an EFT or a mutual fund, or if you did, you don't quite understand it. You can't wrap your mind around it. Well, that's the safe way to go if you're a beginner. An EFT and a mutual fund are pretty much the same thing. They are like files of companies all in one basket. You have many companies in this folder, and it's managed by professionals who are going to say, well, we got so many companies in here. Let's just say we have 20 companies, and if you invest in an EFT or a mutual fund, then you're investing in all those 20 companies, or however many companies that are in that particular file. It is the fund manager's job to sell and buy shares of companies, because that's what you're giving your money to professionals to manage that mutual fund. So if you had 20 companies and let's say 5 are doing really bad, the good news is that maybe 15 are doing pretty good. So therefore you still reap the benefits. Now you say, what's the difference between an EFT and a mutual fund? Well, they're pretty much the same. They're pretty much the same. Mutual funds are a little more in cost, but they are monitored closer. An EFT, less in cost, less babysitting of the fund. An EFT prices move throughout the day. It moves like a stock. The prices of an EFT goes up and down throughout the day. So if you wanted to sell your EFT at noon, you get the noon price. If you want to sell it at 2 p.m., you get the 2 p.m. price. A mutual fund sells at the end of the day. You have one price per day. It doesn't fluctuate until the final sale of the day. That's a mutual fund. And pretty much that's the big difference. More people are moving towards EFTs because, hey, it's cheaper in funds. Personally, I started out with a mutual fund and it did pretty well. A lot of people, some complain or are concerned at least about the fees. I don't concern myself with fees too much. If the fund is doing great. So if I'm getting great results, I'm okay. I'm really okay with the fees. I really am. Some people, they don't want to pay all that money. They figure they can get a better bargain, which is their prerogative. So I don't want to leave anything else out in this video, but one thing I do suggest, that if you're investing in the stock market, you're either two people. You're either an investor or a trader. An investor is in it for the long haul. It may take months and years. You just gotta, like, if you feel confident in your decision, you need to really not watch it every day, because there's going to be dips and dives. They may be months of dips and dives. If you're a trader, traders are people who are looking to get in and get out really quick. Nothing wrong with it. Nothing wrong. But you got to look at the tax repercussions of that, my lovelies. You really do. But trading is really for the more advanced investor. Most people want to invest. You should sit on that nest, sit on it, sit on that egg, wait till it happens. That's if you're really confident. Now, if you got one egg, which is one company, it is a little risky. But if you feel confident in it, go. If you want to invest in that company, do your due diligence and research it. Research the company. We'll find ways of researching in later videos, but you really have to do your due diligence. If a mutual fund, they tend to have, or EFT, they tend to have a lot of companies, and so it's a safer bet. It's a safer bet, so you can sleep at night. So that is the conclusion of this video, my lovelies. We will be discussing a lot of things about investing, but we're going to do it in ways, smart ways. Drop me a line below. Drop me a line below. Tell me what you would like to know about. All right, my lovelies. You know what you have to do. Hit the notification bell so you can get this wealth, okay? And the subscription bell. Go ahead and do it. All right, my loves. It's not going to cost you a dime. It's not going to cost you a dime. Just you're going to get some nuggets of information and you're just going to get richer. Okay, my lovelies.